Hey guys, Alex with Prime Real Estate Experts here. This is the monthly market update for January. Keep in mind, this is a summary of the article that I send to my clients every month. So if you guys want a more in-depth, article style email, make sure you guys contact me and I'll get you added. That way you get those every month. But anyways, just jumping straight into it, starting with inventory. We did see inventory increase. So in December, we had 9,272 homes on the market. And in January, we had 9,562 homes on the market, which is like a 3.13% increase. So we did see inventory increase. And this is for a couple of reasons. So one being, that's just kind of what we see going into spring. We see inventory increase as more sellers hit the market. But then also we did see sales decrease pretty rapidly. So in November and December, we had just over 3,000 homes sell, and in January, we didn't even get to 2,200. That is a pretty substantial decrease in sales, and reason being is people just don't like moving this time of year, and that combined with the current interest rate environment we're in reduces demand pretty substantially. So we did see prices start, we did see home sales come down a little bit. In addition to that, speaking of prices, we did see prices come down as well. So in November, average median sales price was $502,350. December was $501,950, and in January is $499,000. So we did see prices come down slightly. That is because of the reduced demand. All of that to say, prices did increase 2.4% year over year, the median. The average sales price increased 11.2%. And it's important to pay attention to both. Usually the median is a little more accurate because it gets rid of some of the outliers. Although it is important to pay attention to both because there's a huge difference, right? And yeah, so list to sold ratio, kind of what homes are selling for. 100% means it's sold for 100% of the asking price. Above and below that is the percentage we get. So anyways, so November, 96.2%, December 96%, January 96.2%. So on average, homes are selling for about 4% below asking. And as far as rates go, so keep in mind, these rates were pulled by my lender on the 14th of February at 12 p.m. I have to give you that little disclaimer. All of that to say, your rate is going to be different from what's on here, and rates have already changed. They change every day, they change every hour, so it's going to be different than what's on here, but this is just a snapshot to give you an idea of where they're at. Anyway, so for a conventional loan, 5% down, 780 score, your rate's going to be 6.875%. Jumbo conventional loan, 20% down, 780 score is going to be the same rate. FHA loan, 3.5% down, 660 score. Your rate's going to be 6.25%. Usually FHA is lower. That's going to save you a couple $100 on your mortgage, depending on the price point, right? So anyways, as far as what rates did something pretty interesting this week. So we had a couple of really important reports come out, like we always do. Anyway, so CPI came out, and keep in mind, this is the 10-year treasury. Mortgage rates follow the 10-year treasury pretty closely. So this is essentially what rates did at the same time. But anyway, so rates were trending upward, and the CPI data came out and rates shot up because it came in above expectations, meaning inflation is higher than we thought. Right after that, a couple of days later, the PPI report came out. And what this did was it showed that inflation could be lower in the future. So that helped rates come down a little bit because it's showing that future reports are going to be lower. And then retail sales data came out showing that people are spending less money, which is showing that there's some economic hardship. People are spending less money. Maybe people don't have jobs, they're not making as much as they used to, yada yada. So that helped bonds come down as well, because that showed inflation could slow down in the future. So basically, for rates to come down, what we want to happen is weak economic data. So what that means is people losing their jobs, unfortunately, people spending less money, all of those things that could lead to a slowing economy. People spending less money will help inflation come down, which will in turn help rates come down. No one knows what's going to happen. I don't know what's going to happen. No one does. Anyone who tells you they know what's going to happen is lying, unless it's Nancy Pelosi. But anyways, my 2 cents of what I think is going to happen in the future is inflation is going to stay relatively stable. we're going to see it come up a little bit more or go down a little bit more, kind of how we have been seeing the last few months, until something larger develops, whether this be new economic policies from the Trump administration or new wars starting or wars ending, things of that nature that can affect inflation. As we see bigger news develop, we'll see inflation move in one direction or another more drastically. The ways to take advantage of this market kind of depends on what shoes you're in right now. So if you're a buyer, I think right now is a great time to get out and look. Sellers are definitely more desperate than they were, last spring. Real estate is very seasonal. So to give you an example, I showed 7 homes yesterday. Pretty much right after, most of the agents called me and asked if my clients were going to submit an offer, what they thought of the home, etc. What that tells me is they're getting a little more desperate, which is great for buyers because that gives you an opportunity to come in and negotiate. For a seller, it's the opposite. You want to wait until most buyers are on the market, which is going to be in the springtime. So probably wait until middle of March, end of March. That'd be a good time to hit the market with your home, and you're going to get the most. That'd be a good time to hit the market with your home, and you're most likely going to get more money that way. But it really just depends on your situation. If you want to run through your personal situation and see which way you should go, feel free to give me a call, text, email, whatever is most comfortable for you. And we'll get started on that. But that's all I have for you. If you guys have questions, reach out. But see you later.